Let's have some stock talk. I want to give you some easy tips to be able to learn how to buy a stock, right? Right now, we in an interesting economy, and I think the stock market going to go down. And when the stock market goes down, a lot of people going to get rich because all the great companies that exist are going to be on discount. And I'm salivating ready for that moment, right? As much as we like to see our money go up, I'm not trying to buy no stock at no expensive price. So if I get opportunities every once in a blue moon to catch it while it's down, I'm going to seize the moment. And I hope after this tutorial, you will seize the moment as well. So let's get into it. So, how much can you invest? Listen, you can invest 1 cent, you can invest $1,000,000, right? Whatever amount of money you're comfortable investing, just go for it, right? Pick a specific amount and be willing to lose all that money. I have not seen that happen very often, but it's possible, and you just have to understand that, right? Just gotta understand that risk. And risk management is a way to help you understand that, right? So just make sure you know the stock market don't always go up. It can go down. But on average, the stock market does better than it does worse. So, with that being said, you take it how you want to. I trust history, and history tells me the stock market is up more than it's down. So, next thing is, let's determine where you want to be able to purchase your stocks at, right? You got to purchase stocks through a brokerage, right? A brokerage account. A brokerage is an investment account that allows you to buy and sell a variety of investments such as stocks, bonds, mutual funds, and ETFs, right? I wouldn't get too far in the weeds with everything, right? Just focus on some single stocks or maybe some ETFs, right? That's the easiest thing to do as a beginner to start off with. So the next step is to figure out where in particular to be able to buy those stocks at, right? And I gave you a few examples over here at the right. So we got Robinhood, Webull, E-Trade, TradeStation, Fidelity, Ameritrade, and there's many more. You got Ally, you got Tastyworks, you got Stash, you got Acorns, and I can keep rattling them off, right? You just gotta figure out which one works best for you. For more beginners, I suggest a Robinhood or a Webull, something like that, right? Because it's very user friendly and it's very easy to figure out, right? So I'm going to give you an example using Robinhood. I know Robinhood left a bad taste in people's mouth after the whole GameStop thing, but I assure you, if you're not dealing with tens of thousands and hundreds of thousands of dollars, Robinhood is perfectly fine to use to learn how to invest, okay? Next thing is the exciting part, and one of the parts that's most difficult for people, and that's just picking a stock. Where do I start? I don't know what to do. You tell me. No, I'm not going to tell you what to do, right? You can figure it out yourself. And I know that's counteractive to what I'm trying to tell you, but my point is you're literally every day you're walking around, you're seeing goods and services. Anytime you purchase something, you're purchasing a good or service. So the best way to start is with what you use and leverage right now. Do you wear Jordans? Do you have an iPhone? Do you use Microsoft Office? Do you have Facebook and Instagram? Like, start looking at the companies you're using right now. If you can take the risk and buy their products, you can take the risk and buy their stock, right? And at least you got some stake in the game when you do that. For people that say, oh, that's cool, I want to know a little bit more before I just blindly purchase something that I buy, well, that's when you have things like technical analysis, right? This is when you're getting a little more detailed into what you want to see in a stock before you purchase it, right? This is something that is going to take a long time to perfect, but some simple things that you can use as far as a technical analysis standpoint is looking at the 52-week low and high, right? For instance, let's say if I go to buy Meta, which is Facebook stock, right? And Meta's at $100 a share right now. And I go to look at the 52-week high, and the 52-week high was $102. I may say, I don't know if I want to buy that right now. It's close to its max. It's close to its 52-week high. If I buy it now, there's a good chance it's going to go lower. I don't know. I want to get my stock at a discount. Or if I look at it and I see the 52-week low was $98. Now I know buying that Meta at $100 is a good discount, right? I got a lot of wiggle room for it to go back up to get to a higher state. So that's one way to look at it, right? You can look at the 3-year and 5-year return. You may feel a little more comfortable when you go to purchase a stock and it's said that the 3-year return is 90% return. The 5-year return is 150% return. That lets you know in the long run, in general, that stock made money compared to lose money. So now you're saying, okay, if I hold this for 3 to 5 years, there's a good chance I'll make some money in return. So I like that, right? Another thing is how much volume is being traded daily, right? One of the things I did and I had to learn when I was day trading in particular is I want a stock that moves 1 million shares a day on average, right? And that lets me know there's a lot of people in there interested in this stock, buying and selling this stock. So it may be a good stock to try to deal with. So those are a few things from a technical analysis standpoint that you can leverage, right? And then just look at the news. One thing I do is I'm on CNBC every single day trying to find out what's going on. Look at the news and find out that the sectors of the stocks that you're interested in, how are they doing, right? Is tech stocks doing good right now? Is industrial stocks doing good right now? Is healthcare stocks doing good right now? And pick some companies that are actually healthy in the economy currently. So that's another thing you can do to figure out how to pick a stock. Now we get to the 4th step, which is picking an investment strategy, right? There's a bunch of different investment strategies. You have to do your research to see which one is best for you, but I wanted to outline a couple things that may work in your favor, right? That's dollar cost average is one of the strategies, right? That means you're just going to invest over time and average it out, right? You're not worrying about if the stock is up, down, or all around. You're just going to keep buying, and then eventually over time, it's just going to average out the amount of money that you're purchasing this stock at, right? Dividend investing. You want to get a little something back in return for the risk that you're taking in buying these stocks. You can focus strictly on stocks that give you a little dividend payment. And a dividend payment is pretty much a reward for an individual that purchases that stocks, that company's stock, right? So they're saying, okay, Apple, since you bought some Apple stock, we're going to give you a small percentage of money back for each share that you own because you are supporting our company. And that's a great way, especially if you're putting a lot of money in the market, to get something back every quarter. Growth investing, right? This is looking for the companies that are growing exponentially, right? They're getting 100% to 1,000% returns pretty quickly, right? But then at the same time, they can crash really quickly. So you got to take the risk with the reward. But ultimately, if you time the market right, growth stocks can be a huge attribute for you to make some good money. Value investing, right? You're not really looking for it to skyrocket. You're looking to see, is this company a good company? Is it valuable? And is it steady over time, right? That's something that a lot of long-term investors that want to be a little more safe leverage is value investing, right? Do you want to do single stocks or exchange traded funds, which are ETFs, right? Basically saying ETFs are a bunch of different single stocks put together, which kind of helps balance the risk out because it's not just determined on one specific company. It may be 50 companies in that ETF. So a lot of people right now are leveraging ETFs more than single stocks just because it helps lower the risk a little bit. But you can't get the great rewards that come from a single stock company that's doing extremely well specifically. So that's another investment strategy. Short term versus long term. You got to understand, how quickly do you want to make this money, right? I'm a long-term investor more than I'm a short-term investor. When you short-term invest, you got to understand the tax liabilities, right? If you don't hold a stock for more than a year, you're going to get taxed with a capital gain tax if you sell with a win, and you're going to get taxed for income tax. So you're going to get double taxation. It may work out in your favor if you made a lot of money in the short term, because at the end of the day, you may say, I want my money up front. From a long-term perspective, if you hold it for more than a year, you don't get hit with the same tax as you would when you sell after a year compared to selling within a week or a month. And you can lock in gains longer, and you can hold on to the equity of that company long term. So Short term, long term. Next step and the final step is buying a stock. We went through all the steps. You know what company you want to be able to purchase. You know the strategy you want to take. Now it's time to go ahead and buy that stock. You can buy it at market value. That means when you go in to log in, whatever that stock is worth at that time, you can go ahead and purchase it. Or you can say, I want to buy the stock at a specific price. So you limit where you get in at. And when the stock hits that price, that's when you'll buy it. And then you just got to figure out, based off the amount of money that you're willing to spend, how many shares of those stocks can you purchase. With that being said, let's get into the actual example so you can see it for yourself, okay? All right, so let's get into actually how to buy a stock, right? We're going to use Robinhood, for example. When you log into Robinhood, you're going to have an account. You're probably going to have zero because you're not going to have any money or bank linked. So the first thing you need to do, and they'll walk you through it, is link your bank to your account, right? It's going to ask you what bank do you want to link. Once you link, you deposit some money into your account and you'll see the money up here ready to invest. So now what you do is you simply pick the stock that you desire to be able to buy. Let's say we like Apple. You can either use the ticker symbol, which is the short symbol, to be able to identify the stock, or you can look up it by company name, right? So you don't need to know. So we like Apple. So we're going to pick Apple. From here, you can start using some of the technical analysis I was telling you about, right? You can look at the 5-year return. The 5-year return is 243%. That means in the long term, Apple makes money more than it loses money. You can look at some of the other things I was telling you about. Dividend. This is a stock that they're going to reward you for investing in them, right? You get a 0.61% dividend yield right there, right? Here's today's high, today's low, 52-week high, 52-week low. You remember some of those numbers I just discussed? So now you know when you're looking at the stock, right? It's at 151. And the 52-week high is 179. The 52-week low is 124. So, hey, it's right in the middle. We got some wiggle room to grow. So I feel confident about buying some Apple right now, right? It's not necessarily too high and it's not necessarily too low. So now what we can do is we can go over here. Easy. Buy some Apple. So you'll notice some different type of order types right here. Your market order, your limit order, your stop loss, your stop limit, etc., right? There's short-term investing, there's long-term investing, right? With short-term investing, that's more day trading kind of lingo. So you're going to see a lot of stuff that's more associated to day trading than it is to long-term investing, right? Market order means whatever the price is worth right now, which was 151.40 cents, that's what you're going to buy it at, right? Limit order means if you don't want to buy it at 151.40 cents, you want to buy it at $145 exactly. When the stock hits that price, it will buy it for you, right? And then similarly, when you want to sell, stop loss order, you'll be able to sell at a specific price. We're not worried about all that right now. We just want to buy the stock and start locking in gains. So we're going to buy it at market order, which is 151.40 cents. So it's already set for that. You can buy it by shares, or you can buy it by dollars, right? Depending on how much money you have to spare, you choose, right? I suggest just buying it by the share. But if you don't have enough money to buy a complete share of a company that you like, it still can be beneficial to get partial shares. So in our example, we're going to say $1,000, right? We're gonna buy enough shares to get to $1,000. I don't know what that is. So it's 151. So that's about 8 shares, a little under 8. So about 7 shares, right? We can afford of Apple right now. So we'll put in the amount of shares. We see the estimated cost of that share, and we literally can hit, boom, review order, lock in that stock, have it underneath our umbrella, and now once we buy it, when we come back to the screen, it's going to show how much money we made or we lose, right? And it's going to show how much we have invested in every day, how much money we gained or how much money we lost. Literally that simple. Don't look at it every day because the stock market goes up and it goes down. It can be nerve-wracking. But at the end of the day, Once you start getting used to this process, seeing how it looks, understanding why it's going up and why it's going down, you're going to feel a lot more comfortable buying stocks. This is how you do it. Simple, right? Get out there, buy some stocks, get some ownership in these good companies, and get this money. All right, y'all. Hope this was helpful. Till next time.
Put that work in. 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 They got to catch up. Cause I'm too fast like Usain. Don't put me in no one-on-one, get cooked up. Well done. Came about that low pond, but now I'm swimming with